Hi guys, I think this is probably the hottest topic of the day. This news just came in yesterday, very late last night, about 11:50 something. Yeah, obviously it's a new cooling measure, but let's revise a little bit more on what is it about, and then what are the potential impacts on the market, and whether is it going to be serious, and is it going to crash the market, and does it deserve all the hype that it is going through, or rather blazing around all the chats today? Because yeah, but whole basically the whole entire morning and all the way until late last night, I was we were having team discussions on the impacts of this, and also keeping clients up to date, and then addressing their concerns on all this. And anyway, let's move on to the main topic of the day. Okay, if we look at point two, the implementation of the property market measures in December 2021 and September 2022, they had a moderating effect, but they also acknowledged that demand from the locals for own stay has been especially strong. And if you have most of you probably would have seen the measures by now already. You realize that despite this one being the main driving force of the property market movement, but they basically effectively left us locals untouched. Okay, why is it so? I think it has been addressed a lot of times already. The main objective is for them is that they do not want to curb, they don't want to stop locals housing aspirations. That is given. I think they also want to preserve the rights of the locals, which is I think justifiable, because after all, the locals basically our interest has to come first lah. Oh, and then for this part, the second part is the one that is there is more of their concern, and renewed interest from local and foreign investors in our residential property market. Especially this one was really basically they're not just gonna shot lah, they're gonna bomb. I think that is really quite a big surprise. This measure came in really like quite a surprise. We were having a team discussion on something else at 11 plus, and then suddenly it came on nowhere. Hey, there's a new cooling measure, so everyone was basically scrambling and trying to find out what was it about. And so it was quite an epic experience lah. But thankfully, very I would say it is very likely not going to crash the market. That is something that is that is more assuring, and I really don't think that it is in the government's interest to crash our market, because that is not something that they want. And then if we zoom in again, basically the two main cooling measures previously that they mentioned, what were they? TDSR dropped to 55%, LTV dropped to 85%, and then EBSD went up from 12% to 70%, and yada yada. After that, not enough. September kept moving again, probably due to Lantern Modern, all the hype and everything, especially after in the wake of Amo residences, which kind of helped to push up the flash estimate, or rather not a flash estimate, the PPI recorded for that quarter. And then they introduced the 15-month waiting period, which basically effectively limited the downgrading ability of the private owners, unless they are 55 years old and looking for 4 room and below. HDB LTV got further reduced to 80%, and MSR percentage from instead of 2.6%, they raised it up the assessment level to 3.0. However, the actual interest stays at 2.6% for those of you who need a little bit of refresh. And then their concern is that if all these factors left unchecked, then prices will run ahead of economic fundamentals, and that it will be a over overly insane increase in prices relative to incomes. After all, it has to align with the income levels of the public, right? And this is by now most of you would have already know lah. The three main groups that are not affected. The first, property for both Singaporeans and PR, it stays the same as it is, and also developers. I think they have been honestly they have been taken quite bad already lah from all these upfront ABSD. The only other thing is that but then again later I will share also, was this partly targeted towards them? I think also possible. But the other few groups that have been that are getting it quite bad, these two are not that bad. This one increased 3%, this one increased 5%. If somebody is willing to pay 25%, increase 5% is not too much, not too pain. It is painful, but it's not too much of a pain to them. And this one also increased 3% is not too much of a pain. So I wouldn't say these two are drastically affected. Um, Permanent residences also, this one 3%, 5%, 5%. So I would say yes, it hurts more, but it's probably unlikely gonna completely stop them from aspiring to own a second or third property under their name. It's just gonna have a knee-jerk reaction and then cause them to probably wake up, and then after all the fear and all the hype has been settled down, they will probably start coming back to the market again. But these few groups are, I would say, severely affected. Foreigners 30 to 60%. I think this is twice, this is double the rate. This is I think effectively government wants to eliminate foreigners. But is it going to effectively fully eliminate foreigners? I'm very, very, I would say very, very, very unlikely. But the ultra high net worth guys are still going to come in because to them they buy a property because yes, they can be investment, but to them they buy more of a status symbol. After all, people buy Sentosa. People know that Sentosa company are not making money, but still buying Sentosa. Why? Because to them it is a status symbol. To them, it's not to say that I buy this to invest. Maybe it's a way for them to keep their money, um, rather than like us Singaporeans, we are very concerned about the 5% increment, by 10% increment, that kind of capital gain. But to them, is they are making much more in their businesses compared to uh this kind of property capital gains lah. So to them it's not gonna hurt too much for the ultra high net worth. However, for the working mid to high income earners, or maybe even the Henrys, or even those that are earning a few 100,000 a year, not the ultra high net worth guys that are earning millions and millions a year. For those that are the few 100,000 range to maybe even 1-2 mil range, these guys are gonna be, I would say, more likely going to be affected, and they will be shoved out of the market for the time being lah. Same goes for entities, companies, and also the trust. So it seems like the government wants to really clamp down on those people that are buying under trust. Okay, let's try to understand a little bit more on the rationale. Is to help elevate the market for both rental and also own stay. After all, rental goes up because people are buying and then charging high rental because the price has been driven up, and as such they will have to justify uh, the the payment of the mortgage with higher price, higher rental. What they have been doing, or rather what they are trying to do, is to increase the supply of private housing, which you can read over here. I'm not going to read all this. Ultimately, it is to moderate housing demand, and also, as always, you realize that the past few cooling measures, they have been trying to promote, they have been trying to say this, promote a sustainable property market. That has always been an in the past few cooling measures. This phrase has never ever failed to in their official announcement, which is understandable because this is really what they have been trying to tell us. But they want our property market to slowly go up in a more sustainable manner, rather than like the heydays has been going like this and then like this and like this. So because every time you go this, there will be people who hoard because they offload here, but people who buy here, they will crash, and then they'll be sleeping on the streets, and then the cycle remains and remains, and it wouldn't really look so well on the government, because it will be every time when people goes bankrupt, it's definitely not going to be something ugly, and the government doesn't want that. We wouldn't want people sleeping on the streets. I mean, there are, but if compared to many other countries, it's a lot lesser, and that is something that we wouldn't want. Okay, and this is an example. Previously, you realize that there was a sudden checkup in PPI, their property price index. This is from URA, by the way. And why was it so? Previously, it was from Canning Hill Pierce. Suddenly check up because a whole bunch of units, few hundred of them come in together at 3,000 plus BSF, and that actually jerked the market up and pull it upwards. After that, it was a little bit more moderated, and then another two jerks again. So why is it happening? Mainly because of particular launches. It's not to say the whole market. The whole market, yes, is cheap, especially the past few quarters. We know that resale has been
catching up. Not all resales, by the way. There are some resales that are like this. There are some resales that are like this. There are some resales that are like this. So it really depends on what kind, and whether is it sustainable, that's another thing. So Canning Hill Pierce was the one that jerked this up, and then another two jerks over here. Cooling measure came in, moderated, and then this one was the flash estimate for Q1 2023. So I think government see these, they also well, we gotta do something, man. Because you see this one come in, couldn't measure. This one come in, couldn't measure. This one come in again. We cannot keep doing some like this lah. And upcoming new launches, you know what kind of PSF they're gonna be. In case a lot of you, the funny thing is that people are saying, TT, or you're always so pessimistic. It's not that I'm pessimistic. I think there's a right word for it. Instead of being pessimistic, it's conservative. Ultimately, I mean, if something really passed my test for being conservative, I think that is something really, really safe. The problem is if you want to be investing, we always want to be a conservative investor, especially if you are talking about millions and millions of dollars. But if you are talking about tens of thousands of dollars, you can afford to be a little bit more aggressive lah. But at least for me, I prefer to be more conservative. So if something passed my test, then very likely it's gonna be, I wouldn't say risk free. It's gonna be off a much more reduced risk. And if you are thinking that every upcoming launches there are going to be or the next big thing or the hype come in then I would say you'll be in for a big surprise within the next 3 to 4 years. Because ultimately, yes, I may say that a project is not that good for the next, but mainly it's for the next 3 to 4 years, maybe even up to 5 years. But whatever project you buy, let's say today it may be expensive, like the previous few reviews that are done. If you're talking about holding 10 to 15, 20 years, then very likely it's going to shift. But how fast is it going to shift? Is it going to eventually, if at the start maybe it's not so much, then after that eventually shift like this, or will you want something that shift like this? Then that will be where the difference is. I mean, ultimately, given a choice, most people want to go for this as compared to this, right? I think it only makes sense. So I think to be fair, we want to do our due diligence and aim for something that goes like this instead of something that goes like this. And back to the topic, Scanning Hills Pierce cause this, and then we look at two of them. There are a few of them that actually cause these two quarters to be like this, and also the recent ones that cause this one, and upcoming one, if the government doesn't do anything, is gonna cause another jerk again because of the upcoming few, which is Blossoms and also Continuum. This one, I think part of it is Tembusu Grand, if I remember correctly, it was launched in March, right? Or April, I can't remember already. So that was something, if we do not control that, I think it's not going to look nice on PPI, and it's definitely going to look not so good on the government. Okay, and this is like what I showed just now. This is Q4, and then we move down. This period of time, was Q1, and then, but by the way, this is RCR, this is OCR, and also this is CCR. For those of you who are wondering, these are the indicators. And then just now we are talking about the two, because now we are zooming into why these movements are like this, right? Then so we break down what has been causing all these. And previously, I think Q2 that was Leaf and MB and Piccadilly Grand pull it up in terms of the RCR side. And then this sudden big jerk in OCR was part in Q3 was more of due to Amo Residences and also Lentor Modern and also Sky Eden. And these three being in OCR selling above 2,000 bars, that was something that really jacked up the whole OCR thing. And these two will form actually a lot more volume than CCR itself, and hence it resulted in the movement here. Because the thing is that a lot of people, they only see this chart, it's go high, go high, go high. But the problem is not all properties, as you should know by now, are moving in the same direction. And why is it in this direction? We really need to understand why is it. And sometimes it's really not fair to gauge a property just because the PPI is like this, because it's like telling you, general population in Singapore is are getting richer and richer. But some people, they will argue with you, lor. Hey, what you mean? Because my income hasn't been really moving for the past few years, ma. Then why do you say that? And then they start arguing, lah. And that is something that is similar to what we are seeing right now. Yeah, that's why I feel it's very unfair for people um to gauge certain properties are just because of PPI, or even just even for me, CCR, RCR, OCR levels is a little bit too superficial for you to really gauge the performance of a particular development, because it's really down. You have to, from the top down macro, go down all the way down to the micro level. And the recent one will be quarter, that was Q1, right? And that is the Terra Hill RCR move up, and also the Botany and Seneca residences. And these two were selling about still low 2000. So it kind of matches the level of this. That's why they are around this level. Okay, and then CCR, yeah, just steadily increasing the price lah, which I don't really see too much of a concern. But likely if Newport comes out, which I will share in a quick moment. If Newport comes out, then likely this is gonna jerk, provided if Newport sells well. And as such, well, just earlier this morning, I was sharing with one of my clients, having a little bit of concern about how's the cooling measure. So I was saying this one doesn't really exactly hurt the local that much. It is more of to reduce the ultra high PSF buys, such as Newport, and also I would say Calamity in this sense lah. Because after all, I see, because I'm looking at the rain right now. I was thinking, what kind of sound is that? Yeah, so anyway, yeah, sorry for breaking the train of thoughts. Anyway, I was sharing that this cooling measure is more of to curb the ultra high PSF buys, because it's likely gonna jerk up the PPI, along with others such as Blossoms, and also Continuum, and also Lentor Hill. And then this was at 10 plus. I was saying that this one is more of the counter those like Newport. And then guess what? After that, basically 1 hour, slightly over 1 hour later, Newport got postponed till further notice. Okay. And then also Lentor Hill got pushed back. But at least Lentor Hill, they only pushed back from their original timeline by about 1 week. But on the other hand, Newport got postponed to further notice, which I think to them is more affected, because they are likely gonna target more of foreigners rather than locals. And if we look at KL, IMT, Calam, some people defend. To me, I call it calamity lah. Basically, if you buy the wrong one, it's basically a calamity for you lah. So these are the developments with much more foreigner buys, and they are likely going to be more affected. Warwick residences is 55%. Park Nova has 87%. This is amazing. And these developments are going to be much more affected, whether is it in the real or the resale side. And these Armour residences, so those who bought Armour very likely going to experience much effects from this, because tiny amount of foreigners. And also this is from Dairy Farm residences. I'm trying to get botany data, but apparently it's not available. So unfortunate. But anyway, we got something that's similar in the demographics of the area, and you can see very little foreigners want to aim the area basically. And also Forex, even for RCR, only 2.6% bought into Forex. Okay, so these are the developments that are very likely going to be unaffected by the cooling measures, as compared to those that have more of a higher percentage of foreigners. So who's going to be the next one on the chopping board? It seems right now, upcoming tomorrow, Blossom by the Park. And that is something that I think government also wants to aim. I don't think the foreigners are making up a very, very big percentage. It will probably going to be a slightly significant percentage, but not too big of a percentage. Then but it's more of to moderate market sentiment, because naturally there will be, whether it doesn't exactly affect first-time local buyers, but it will very likely going to cause a little bit more of a negative market sentiment, and that is what the government intends to do. You see, then the next one is Continuum. If Continuum, because of the so-called lower market sentiment, tunes down their selling price, then basically the buyers of Tembusu Grand will very likely be screwed. And same goes for Lentor Hills. If they tune down their pricing because of whatever happened yesterday, then Lentor Modern will also likely be screwed. So we realize all these are chain effect, especially when it comes to buying an area with high supply, competing supply in the area. And because of that, Grand Diamond may also be affected because Grand Diamond is all the way lined up at the back. We still don't know where's the release. And this is Newport Residences basically retreated to don't know where. We have no idea to further notice. And also there's also another one, since start of last year, wait until now, Arden, although basically the turn until don't know when. They are still waiting. Nobody knows. Okay. So one thing I feel in a nutshell, this particular set of cooling measures that came in yesterday, to me is more of a warning shot. It doesn't really hurt the local, which forms more than the 90% bulk of the buyers. Because if I remember correctly, just last year's one of the articles, it says foreigner purchase transactions is only about 3+%, which is not too significant. And probably the rest of the 10%, 10 minus 3 plus, so maybe 6 point something percent is from those that buy second, third property kind of thing. And it doesn't really hurt that much of the market, but it's more of, hence, to me, it's more of a warning shot in that sense, to fire and then basically send a signal to the developers, hey, you guys don't overprice, because nowadays their margin are a lot higher compared to the COVID days, and that is something that a lot of people don't realize. They will always say, hey, this one Blossom is selling at a good deal, man, blah blah blah, but they realize the margins compared to last time is a lot higher. But a lot of people don't see it, because they don't have access to the kind of data. So basically this one, the foreigners and the trustees one, they've been shot in the face, but the locals have been duly warned. Okay. So if you are on the sidelines, you may have to really consider the factors at play, and then not to say that you cannot buy. I mean, if you don't have a property under your name, you can still consider investing, because after all, the market is probably going to have a slight retreat before it starts climbing again. Because this one is not really this is not really like a hit shot for the locals. It's more of a warning shot for the locals. So very likely the main bulk of the buyers is going to come back to the market very, very soon. It's just that now they are scared. So you have to be able to decipher which are the good buys, and then try to go for it before the main bulk of the the crowd comes back in, right, and rushing in again. So if you need help to find out which are the good buys, then let me know and I'll try my best to help out and then see how we can progress your property portfolio. Okay, that will be all we have for today, and then see you guys. Bye bye.